Hi everybody, my name is Mary Redmond and I'm talking right now on Sunday about the Euro New Zealand dollar pair. This is probably going to be a fairly difficult trading week with very low liquidity. Obviously there's not going to be much to do on Monday because the US markets will be closed, and then there's Friday, there's the non-farm payroll, and the following week there are 4 central bank meetings. So this week may just be a week with not the biggest opportunities to trade, but there may be some opportunities. And the reason I like this one, if you look at the Euro New Zealand dollar, it's one of the strongest trending pairs, and you always want to look in trading for the strongest trending pairs. This one, if you look at it on any time frame, looks like there's a massive head and shoulders pattern that's formed over the last several years. If you look at it on any of the daily, weekly, or monthly chart patterns, it's below all of its major moving averages. And on the daily chart pattern, it shows right here that it looks like the 50 and 100-day moving average may be crossing below the 200-day moving average, which would be a very bearish indicator. And moving a little bit closer up, it shows that there's a channel here that's formed. It's a very clear downward channel, and you've actually got what looks like you could put the top of the channel up here actually, and what you can see is that unless it breaks above this level, which would roughly be the 76 level, the trend is pretty strong to the downside, and it's probably not going to break this week. It's probably going to continue its downward trend for this week following Memorial Day. And obviously the New Zealand dollar has been on an incredible tear against most other currencies, and part of the risk in this position is if we had a major pullback in the New Zealand dollar. And personally, I do think that the New Zealand dollar, US dollar, is going to make a pullback in the next few weeks probably. It's just stretched too far to the upside, and obviously nothing is going to continue to explode at this rate forever. And that news came out last week about China investing $2 billion in New Zealand, which isn't really surprising. I mean, the fact is China's been investing all over the world for over 10 years. And news also came out that the RBNZ put out their expected inflation rate at 3.0. So that increased the expectations of rate hikes from the RBNZ over the coming 12 months. So that's one of the reasons why the New Zealand dollar exploded upward. But the New Zealand dollar, like the Australian dollar, trades in pretty close town to the stock market. And what you can see, if you draw a line at the S&P 500, which is the broadest market index, you can see that it's a very clear upward trend, which has lasted over a year. And then we have this downward trending channel. Well, I think personally we're going to have a pullback from the downward trending channel this week, but I think we probably won't break out of this big wedge until later. It's due to break somewhere towards the end of June, and I think it's probably going to break to the downside, but probably not this week. And what you're seeing going on in the markets now, in the stock markets, is the major fund managers that getting all this liquidity that that buy many millions of dollars of shares of stock every day. They know it's a bull market and it's coming up at the end of a quarter, so they want to have stocks in their portfolio. They have this type of window dressing that they do to make sure that their people who invest in the fund know that they participated in the bull market. But on the other hand, they also know that the quantitative easing by the Fed is going to end at the end of June, and they don't want to chase anything higher here because we could be coming up on a period when it's going to be a lot more difficult to make money in the market. So just for this week, we're probably going to have a range-bound S&P. I'm thinking that it's probably going to go down to the bottom of its channel, but the risk that we're going to have a major breakdown in the stock market just this week, it's probably pretty unlikely. There's just not going to be enough participants and not enough selling going on. So you've got the other pair with the Euro New Zealand dollar is the euro, and the Euro US dollar did make a big move up after its close to 1,000 pip move down, which was earlier in May. And it hit a Fibonacci level, which was 43.3. But the euro against some of the other currencies, the euro Japanese yen, the euro British pound, it's really been range bound, even trending to the downside. So this euro US dollar move might be dependent on US dollar weakness as much as true euro strength. And of course we know that, we haven't heard anything about the sovereign debt issues, and we're going to have some bond auctions actually on Memorial Day from Italy and Spain. And then there's some other economic reports coming out later in the week. And, there's people talking about in the newspaper all the time about the terrible crisis it could be if Greece defaults or any of these other countries default. And it's hard to say. It might already be priced in, because looking at the way the Greek bonds are trading, they're trading 50 cents on the dollar. I mean, it's probably already priced in. But nonetheless, there's this ongoing problem. And you have an ECB meeting the week after next, so there may not be a clear break one way or the other in the euro's trend until the ECB meeting. But that's one of the reasons why I think this is probably a pretty good pair for a range-bound market that's not going to have a whole lot going on this week. And I think that there's every reason to believe that this trend is probably going to continue. So that's why I'd favor shorting it. If you get a move up to 75, I think that would probably be a pretty good short, putting a stop in above 76. Because if we had a clear break in the euro in the next couple of weeks, this one has the potential for a lot more downside. And if it breaks below its all-time low, which is slightly below $1.70, then you could have a real sell-off.